Welcome back to Algobot, the channel where we take apart automated trading systems and study the ideas that drive them. I'm your host at Algobot, and today we're examining an expert advisor for MetaTrader 5 called Belt Hold Reversal. This is a candlestick mean reversion strategy that blends a classic Japanese candle pattern, the belt hold line, with two familiar tools, an exponential moving average and the average true range. By the end of this video, you'll understand exactly how the strategy reads each bar when it signals a trade and how it manages its stops and targets. Let's get started. So what exactly does belt hold reversal do? At its heart, this is a counter-trend candlestick strategy. It looks for moments when price has stretched a long way from what it treats as fair value, and then it waits for a single, decisive candle that suggests the stretch may be exhausting. That candle is the belt hold line, sometimes called the opening marubozu. A bullish belt hold opens right at its low with essentially no lower shadow, then travels firmly upward and closes near its high. A bearish belt hold is the mirror image. It opens at its high with no upper shadow and closes near its low. In plain terms, one side of the market seizes control from the very first tick of the bar and holds it all the way to the close. On its own, a belt hold candle appears constantly, so the strategy adds context. It measures fair value with a 34-period exponential moving average, and it measures how far price has stretched using the average true range over 14 bars. Only when the candle's extreme sits at least 1.5 ATRs away from the moving average does the setup qualify. A bullish belt hold that prints while price is stretched below the average is read as a possible snapback higher. A bearish belt hold that prints while price is stretched above the average is read as a possible snapback lower. The default design has pound sterling to US dollar and gold in mind on the 15 and 30-minute charts, but it reads every bar through the chart's own symbol and time frame, so it can be tested on any liquid market you choose. It's built for traders who are curious about candlestick logic and volatility-based filtering, and who want to study how a rules-based system fades an overextended move. Remember, this is educational information only, and it involves risk. Losses do occur, and nothing here is financial advice. Let's walk through the mechanics step by step. The expert advisor works on closed bars only. On each new bar, it looks back at the candle that just finished, which it calls the signal bar, and it recalculates the moving average and the average true range up to that bar. It also checks that no position is already open under its own magic number, because this strategy holds just one trade at a time. First, it measures the signal candle's geometry. It calculates the full range from high to low, the size of the body, and the length of each shadow. Two geometry conditions define a belt hold. The body must be decisive, meaning it fills at least 55% of the total range by default. And the shadow on the opening side must be tiny, no more than 10% of the range, which is what tells us the candle opened right at its extreme with almost no wick. For a long setup, the strategy needs a bullish belt hold, the close above the open, a decisive body, and a lower shadow that is essentially flat. On top of that geometry, it needs the overextension gate. The distance from the moving average down to the candle's low must be at least 1.5 ATRs. When both the candle and the stretch line up, the EA signals a buy. Entry is taken at the current ask. The stop loss is placed just below the belt hold's low, with a buffer of 1/4 of an ATR, so a little breathing room beyond the extreme. The take profit is set at the reward to risk multiple, 1.8 by default, times the distance from entry to the stop. The short setup is the exact mirror. The strategy needs a bearish belt hold, the close below the open, a decisive body, and a negligible upper shadow, printed while price is stretched at least 1.5 ATRs above the moving average. When that aligns, the EA signals a sell at the current bid. The stop loss goes just above the belt hold's high, again with the 1/4 ATR buffer, and the take profit sits at 1.8 times the risk distance below entry. Every trade, therefore, carries a defined stop and a defined target from the moment it opens, and the strategy simply waits for the next qualifying candle. Let's look at the actual MQL5 code running inside MetaTrader. At the top, we have the input parameters you can adjust in the strategy tester. EMA period, defaulting to 34, sets the moving average baseline. ATR period, at 14, drives both the stretch gauge and the stop buffer. StretchAtr, 1.5, is how many ATRs past the average the candle's extreme must sit. MaxWickFrac and MinBodyFrac define the belt hold shape, a maximum opening side shadow of 10% and a minimum body of 55% of the range. Stop Buffer ATR adds a quarter ATR cushion beyond the extreme, and RiskReward, 1.8, sets the target as a multiple of the stop distance. Now the long block. The Boolean bull belt hold checks three things at once. The close is above the open, the body is decisive, and the lower wick is within the allowed fraction of the range. The downstretch Boolean checks that the moving average minus the signal low is at least StretchAtr times ATR. When both are true, the EA reads the ask price, sets the stop just below the low minus the buffer, computes the take profit as entry plus risk reward times the risk, and calls trade.buy. The short block mirrors it exactly. Bear belt hold requires the close below the open, a decisive body, and a small upper wick, while upstretch checks the high sits at least StretchAtr times ATR above the average. When both align, the EA reads the bid, places the stop just above the high plus the buffer, sets the take profit below entry, and calls trade.sell. Clean, symmetric, and fully rule-based. Now let's bring it all together on the chart. Across the price, you can see the exponential moving average drawn as a smooth line. That's the fair value baseline the strategy measures everything against. Above and below it are the two stretch bands, each sitting roughly 1.5 ATRs away from the average. Think of those bands as the overextension threshold. Only when a candle pushes beyond them does the setup become interesting. Watch the opening candles on the left. Price is sliding lower, one bar after another, pulling steadily away from the moving average. Each candle closes a little further beneath the line. By the fourth and fifth candles, price has dropped clean through the lower stretch band. This is exactly the condition the strategy is waiting for on the long side. The market is stretched well below fair value, and late sellers have chased price into an overextended state. Then comes the key candle. Notice how it opens right at its low, with almost no shadow underneath, and then travels firmly upward to close near its high. That is a bullish belt hold. Buyers took control from the first tick and held it into the close. Because this decisive candle prints while price is still beyond the lower stretch band, both halves of the thesis are satisfied at once. The candle geometry is the trigger, and the ATR stretch is the gate. You can see the buy entry marker appear right here, on the bar that follows the belt hold. Now follow the stop and target. The stop loss sits just below the belt hold's low, a quarter ATR beneath the fresh low, so the trade is invalidated if price makes a new low instead of snapping back. The take profit is placed at 1.8 times that risk distance. Watch the next couple of candles. Price rebounds off the low, climbs back toward the moving average, and pushes on until it reaches the take profit target. The overextended move snapped back, and the long trade completes at its target. Now the market keeps rising, and the sequence flips. Candle by candle, price climbs above the moving average and keeps going, until it stretches up through the upper dashed band. Once again the crowd has chased, this time to the upside, and price is overextended above fair value. This is where the strategy starts watching for a bearish belt hold. And there it is. Look closely at this candle. It opens right at its high, with barely any shadow on top, then falls decisively to close near its low. Sellers seize the bar from the opening tick. Because it prints while price is beyond the upper stretch band, the short setup qualifies, and the sell entry marker appears on the following bar. The logic is a perfect mirror of the long. The stop loss now sits just above the belt hold's high, a quarter ATR above that fresh high, and the take profit is set 1.8 times the risk distance below entry. Watch the final candles. Price rolls over, falls back toward the moving average, and continues down until it reaches the short take profit target. Another overextended stretch, faded back toward fair value. Step back and look at the whole picture. On both sides the pattern is identical. Price stretches too far from the average. A single wickless candle signals that control has changed hands, and the strategy fades the exhausted move with a defined stop and a defined target. The moving average tells it where fair value is, the ATR tells it when price has gone too far, and the belt hold candle tells it when to act. Of course, not every belt hold leads to a clean snapback, and losses do occur when price keeps running instead of reversing, which is exactly why a fixed stop sits on every trade. And that brings us to the end of our look at the Belt Hold Reversal Expert Advisor for MetaTrader 5. We covered the Belt Hold candle pattern, the exponential moving average that defines fair value, and the average true range that measures how far price has stretched. We walked through both the long and the short logic, read the actual MQL5 code, and followed 2 example trades from entry to target on the chart. Everything in this video is educational information only, and nothing here is financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MT5 strategy studies. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.